Tesla, Berkshire Hathaway, and Amazon are all down by over 10%, all of which are my biggest holdings. If we look out to the broader market, the S&P 500 and Nasdaq are both also down by 10%. This puts us officially in a correction. All of the earnings listed on the screen are what I read. All of these earnings seem pretty good. So what's going on? In this video, I'll be breaking down my thoughts for the stock market going forward this year. But first, let's check my portfolio. Here, I'm going to pull up my Robinhood portfolio, which I started June 14th, 2022. If we look at the one day, this was on Friday, but I'm up 0.14%, 1 week, 0.61% down, and it just gets worse and worse. 1 month, I'm down 2.91%, and the past 3 months is pretty devastating. I've lost over $300, and my portfolio is corrected by almost 11%. If we go to year to date, we're actually doing pretty good. Up $276, and we're up by 12.61%. Here's also my 1 year, and my all-time. If you want to know how much I've invested at the very beginning, it's $2,178.47. My buying power is $7. Not really buying too much right now. The market's been falling a lot. But here are all of my holdings and the percentages that I own. Also listed on the right side is all of my total returns over the course of these holdings. So Apple's about break even. Mastercard's almost 10% down. Starbucks is over 8% down. Berkshire is over 7% down. And then as follows: Bank of Hawaii, Adidas, Tesla, Amazon, Golf, Coca Cola, McDonald's, Netflix, Costco, Coca Cola Consolidated Inc., Nintendo, and then these are some of my newer holdings which I thought I would talk about. I've added Abercrombie & Fitch to my portfolio because I am officially a new hire of them. I can see the earnings in our store throughout my shifts, and because of that, it totally changed my perspective on the company, and I didn't even know that they're publicly traded before that. And before anybody says that's insider trading, they list the earnings on their quarterly profits and their publicly traded company, so all of that's out there. Another holding that I added is Target. I'm very excited to have Target as part of my portfolio because I've shopped there since I was a kid, and there has not been a dip like this in a long time in Target. And I think now is the perfect time. And the last of these stocks or companies that I added is Chipotle. They had pretty great earnings. I read through a little bit of it, and then, yeah, they're just doing well. I love their burritos. And then the last 4 are just some ETFs that I hold. So if we look at my Robinhood portfolio, it's doing pretty bad, to say the least. But this is why we diversify. If you guys have been following the cryptocurrency market recently, then you will know that crypto is up a lot. So let's open my Gemini portfolio, something which I have not shown since I've started these updates. So currently my Ethereum is worth $341. I have bought $300 worth of Ethereum quite a while ago, and it's appreciated pretty well. Also within Gemini, I stake my Ethereum, earning me, I'll put the listing like right here, I think it's about 3.7% right now, APY, which is really good. That's like having a savings account, which I love. My Bitcoin, as of right now, recording this video on October 28th, is worth $2,304. That's an amazing return, considering that I only bought $1,500 worth of Bitcoin. So this is why it is important to diversify, because you can get all this different returns from different ways. But it's also about diversifying into the right things, which I'll go over a little bit in this video. So going back to what I stated earlier, I looked at 12 earnings over this past week, and each and every single one was a beat. But the market is still going down. What's the reason for this? Well, the short and easy answer is overvaluation and fear. If I was new to the stock market and I was just starting to get invested, I would be so confused because companies are doing well, and usually with that, stocks go up. Well, we are at a point that nobody really knows what's going on. The interest rates are super high, so the money you can get from saving accounts is crazy. So my friend over this past weekend, he was talking to me about his new Apple Card and the rate that he gets with the Apple Card. I think it was somewhere around 4.5%. I'll make sure to confirm that and put it right here, like in the video. And all of my research I'll put in the description of the video, but it's kind of not worth really investing right now because you can get such high returns in other places. But that does not mean that there is not value out there in the market. I will be putting my top 3 companies I'm looking at right now, right here. Apple, Mastercard, and Starbucks. I will not be saying why I'm buying them, because that is up for you guys to decide, for you to decide if that's a company you want in your portfolio. But personally, those are my top 3 I feel are very undervalued and will provide the most value and appreciation for me going forward. But yeah, that's just my update. Those are my reasons. I'm sure everybody has their reasons for why markets are fluctuating so much right now. The most recent indicator that I was recently shown is called the Buffett indicator, and that's what I've been kind of using to gauge. That is currently at 151%, so that just means GDP to market cap of the US stock market to GDP just is not even. There's a 50% gap between those, meaning that the market cap of the US stock market is 50% overvalued. So that's one of my indicators. And another one that I'd like to give more awareness to is the VIX, or the Fear Index. So I was watching another video, and I'll put it here. I forget the YouTuber, but I remember where to find it. He was going over if the Fear Index was something worth looking towards in terms of when to know when to invest in the stock market. And he was saying that 25 is a pretty good range. I'll put the ticker for that there, and then you can do all that research for yourself to gauge whether or not that is a way you want to invest. But if I will give you another pick out there, I'm also looking into Hershey's, because Hershey's is down a crazy amount, and it's never been this low in a long time, so that's another one that I'm looking into. I really hope that you got something out of this video. I hope that my investment journey helps somebody else and that some of my knowledge can go out there. Yeah, this is just my personal investment journey, and if you liked, please like and subscribe as I try to make one of these videos about once a month. Alright, have a great rest of your day. Bye. Also, before I forget, I would love to point out that Chapman University is doing they do it twice a year, so semi-annual, like GDP, or like, they just evaluate the whole US market and just other countries as well, and it's a great event. I've watched it twice since I was there, and then, yeah, it's a great place. I think anybody can watch it. I'll put the link to that in the description. I'm very excited for it, and they've done great jobs of explaining how the stock market works and valuations in the past.